Happy New Year to everybody. It's 11:59. We'll give just one more minute to get people in. But thanks for being here, everybody. Okay, let's go ahead and get started. It is 12 o'clock. Again, Happy New Year. We were delayed a week from this message here. I had a horrific flu, and it was pretty bad. Funny what 1 week will make when we have Ron DeSantis dropping out. We have some big news out in China with the China Evergrande Group, all within a week. So this may have been and proven timely to get us here. Nevertheless, thank you for taking the time. We're going to have a lot of fun here. We're going to talk about the United States elections. Get ready. 2024 is big. There's a lot happening. Ready for the roadsides and all the smear ads and campaigns. We're going to talk about the U.S. economy and just how it's doing. We're going to couple that with the housing market. Is it the big impact that we're all used to over the last decade? Has it changed at all? And then at the very end, I think something that we're going to want to really be interested in and play with is artificial intelligence. So we're going to talk a little bit and even show you some examples of Chat GPT-4, one of the most advanced that you can get nowadays commercial. We use it here at Tradewinds, and we're still exploring it, but it's something fun, and we're going to be able to show you. I think Mike is going to be able to share screens and bring that up. So if we're going to start out here, let's go right into it. Let's go right into the big year, right? The 2024 election. Of course, it's the presidential election. We know that there's House and Senate seats and local election as well. But nevertheless, I think it'll probably come down to Ali Frazier 2, Donald Trump versus Joe Biden. I'm going to share a screen. This is a really good site to use. It's 270 to win. I'm going to give you a share screen to kind of go through what it is. Take us through. Remember, what are we looking for? We're looking for electoral votes. That's every state gets to go through their voting process, get the votes passing over. There's a lot of battleground states. It gets really confusing, but this is a really good site here to use. Let me show you this screen. So 270 to win is the website to look for. And what is this? It's a race to 270, hence 270 to win. It is a really interesting map to show that there is two main states, Nebraska and Maine, are the only two states, strangely, that still go into what they call a district method. They actually can split the vote, but for the most part, it's every state, whoever wins that category, that electoral candidate will get it. So we think, other than the strange things happening where Trump may not actually make it due to some kind of New York court or a congressional ruling, Nikki Haley moves in. It's probably going to be, again, like I said, the Ali Frazier 2. This is a really interesting thing because we're not just talking about a presidential election. There's a Senate election too. We've got 33 Senate seats up. We've got two special elections as well, one of which is due to the death of Dianne Feinstein out in California. She has passed away, so there is a special election for her. But no North Carolina Senate seat is up for election. But again, a really interesting map to look at, shows what happened back in 2020 and any changes that can have. And you can even go in here and kind of click through some changes yourself. I suggest it's a really good way to stay informed in what's going to prove to be an aggressive year for the media. We also have the House. Obviously, the House has got a lot of big votes coming up for it as well. This is going to be, an ad. This is going to be a big thing because every district is up. Let me stop sharing real quick. Every district is going to be up for election, and that's when you're going to start seeing a lot of the smears coming out. Let's go back. So what we're gonna see this year is chaos. We're going to see the attack ads. We're going to see the perfectly timed exposés that are coming out. You know, people coming out of the woodwork from decades ago, accusing people. Just get ready for what my dad used to call kabuki theater. Get ready for theater. It is very important too. We can't emphasize how much that is. Your vote does matter, and I'm going to continue to push that. Even though it's going to be a wild year, you need to get out and make sure your vote is heard. Vote for who represents you the best, right? Vote for who you feel draws to you. And that just goes not just for the president, that goes for any of your senators, any of your for local elections, municipal governments, things of that nature. North Carolina is a big one. Obviously, there's a gubernatorial vote. Roy Cooper is no longer able to run because of term limits. So we've got new candidates on all sides and even a couple of independents. So these are really big decisions to be made. So that's the big year for the 2024 election. It's hard to forecast what's happening. But again, we did see DeSantis just dropped out last year. So again, what a difference a week can make. I do think Nikki Trump may be removed from the ticket, and then all of that kind of power and pressure goes towards her. Again, I'm not here to choose sides. It's not my job, right? This is no bending either way. I'm trying to be as neutral as we can in this. This is more just to give us a state of the affairs for 2024. The funny thing is that everybody asks what happens when somebody does win. Who wins? If do we have a Congress that's split, and right now the House is run by the Republicans, what happens if they continue to control? But Biden wins again, we have a split Congress. What happens if we get a straight ticket run and the Republicans take everything? How does that affect the markets? Always an interesting Jeopardy question there, right? If we can pull up this little metric here on a share screen, there is an actual winner to this, and it is actually a locked government wins. When we have a split House or a split Congress, that's when the markets tend to work the best. And if we can see a metric there, you'll take an average of the S&P 500. It's not really fair, but it shows, a 1 or 2% on average difference works in favor of a locked Congress. And why is that? They love gridlock. Right? We, private sector, love gridlock. Companies love to make sure that there's a bunch of infighting in Capitol Hill. And I've always said this, because if you can't pass anything through, we can operate in the private sector here knowing that nothing's going to come out of Capitol Hill and change it up. Tax law changes or any kind of demands or any kind of challenges to our retail goods or an import and export ban or anything like that. We want the infighting. So that really does help. I'm not necessarily saying that's the best thing, but I get the question a lot. Tim, what will happen if somebody wins? And how's that going to affect my portfolio? Thank you, Mike, on getting this up here. Just kind of take a look. If you lean in, the blue is the Democratic side, obviously, and then you've got the GOP there with the elephant that talks about a House divided here. And you can see if the White House controlled by the Democrat with a split Congress or divided Congress, congressional control, that's the highest at the 3.93. And right behind it again is split between Democrat and Republican within Congress. Just thought it was a fun metric. You can always say that even if my person didn't win or we lose control, if I'm a party or follower, and you don't get maybe your person in there, it can still hopefully help you and benefit in the long term as far as a rate of return. We're hoping, right? Just kind of a funny metric here. It will be, if nothing else, it will be entertaining for 2024 when we're talking just the elections. So we're just getting started. Remember, get ready for all the signs picketing through when you're driving to work or when you're driving to Target. You're going to see them everywhere. So I kind of get interested in that stuff. It's I think if you go to 270 to win, or you go to a Ballotopedia and you really try to find out who you're voting for, I think is the most important thing. Make sure you go out and vote who represents you the most. It's a really critical time, especially the younger viewers here. It is critical that your vote matters and that vote counts. If we just want to kind of set that to the side, because quite honestly, there's nothing we can do here until the election comes through. Let's switch to U.S. economy, U.S. housing market, but I have to preempt by some pretty major news that has come out. And that is, I'm going to bring back to light the China Evergrande Group. That was recently coming back to service. A court has now ruled that they need to liquidate, and that is a significant event. If you're not familiar, or maybe that was a name, kind of a ghost from the past, and you're just starting to read it in headlines, this is the world's global developer. It is the most indebted developer on the planet, about 300 that people would like to think that that's localized to Chinese real estate and Chinese development. It is not. To have money and liabilities of that size, that means you take monies from global institutions, BlackRocks and HSBCs, and we don't know the other banks. Now, I don't want to just go ahead and put those two companies out there. They were major bond holders for Evergrande years ago. I don't know what they're holding now. Honestly, they've probably gotten out of the way of a lot of this, but somebody's left holding a lot of this debt. That can be significant. It gets eerily reminiscent to the global meltdown that happened in Greece when we had global paper meltdown. Puerto Rico had some meltdowns that was devastating to these two economies. And obviously, we can all remember the 07, 08, 09 crisis, what happens, the kind of setbacks that these can have happen. It's going to happen in China. It's going to be very long. It is going to be very costly for the debt restructure. I just wanted to make sure to bring that up to our attention. So if you're reading on that, just know that is going to be something that will be hearing whispers about for quite a long time. There are going to be a lot of well-known mutual funds, pensions, financial institutions that are exposed, and we just don't know the extent of the exposure. I think a lot of people are waiting to see what the Chinese legislators or the Chinese creditors are going to deal with. Foreign creditors, how are they going to be able to pay them out? Are they going to get in line? If you take a look at what bonds are worth for Evergrande dollar bonds, I'll give you half a second to guess what you think an Evergrande dollar bond is actually bidding for now. It's probably lower than you think. It's for 1 penny to 1.5 pennies per dollar bond. That is a failure of catastrophic results. Kind of set the stage. It's not all doom and gloom here, but I think that is quite significant because we just need to see who's going to end up holding the paper in the end. We live in a globalized world. The United States is very much exposed to that, as their institutions are as well. Just so we know that when you're a country like the United States, and you're going to try to prop up the entire system, the thought is and the hope is we're not to do it alone to let China fail. I don't think that would happen. I just know that we're all in this together, fortunate or unfortunate. Where does that leave the United States, right? And more importantly, like I always like to bring this back to you personally, right? Whoever is on this or whoever is watching this. And remember, there's going to be age ranges that are watching this. So when I say, how does it affect you? I literally mean you personally, right? And that's when we're going to go into you taking a good account on where you stand. There are a ton of headwinds for the United States, without a doubt. I think we all know this. It's not necessarily doom and gloom, but these are things we need to be quite aware of. Deloitte put out Q4 state of the market. It is brilliant. If you have a chance to Google that or look at it, look for the Deloitte Q4 report. They've got some excellent metrics in there. First things first, inflation. Positively, it is falling. Inflation is actually going down, right? It may not hit exactly where we want it to be as a target level, but certainly the Fed has done a lot of its work positively. It has kind of used the Paul Volcker playbook and choked off the economy. It's used the monetary policy that it can use, and it is going down. Is it hitting the benchmark we want yet? No, I don't think so. There's even now a call, hey, can we start easing rates? Can we switch from what they call the Volcker playbook to the Alan Greenspan playbook? Can we move now to getting out of a recession by lowering rates? That's a nice cry, but I don't think that will happen anytime soon this year. I think if we were to see any kind of relief as far as rates, it will happen later in the year. It sounds strange, but in all honesty, I think we're going to see such a tense United States with all of these elections and all of this infighting and all of the signs and slogans and bumper stickers and parades and marches. They may just lower interest rates just to let a little bit of pressure out of the system. You never know. I think that's not actually a bad idea to keep that in your pocket. But for the most part right now, we are certainly not out of a recession. but it's not a guarantee or a doom and gloom for one. I think you still need to continue to choke off rates and maybe offer some relief a little later on in the year. That's a big headwind, but still a positive for us. I think a big issue is U.S. budgeting. That's a really big one. I think we really need some leadership and diplomacy in Congress. We need to make sure we're not worried about government shutdowns or furloughs or systems being shut down. Unfortunately, I can't imagine any politician willing to play ball at this point. Right now, their job is to solidify their seat or their party seat. They are putting up fences around, they are taking out who is going against them, and they are trying to solidify their position either in the House or the Senate. So we're not going to see a lot of diplomacy going forward, I don't believe, but we certainly do need some leadership in Congress. Budgeting is big, and that is an unsustainable event inside of the United States. Cost of healthcare is also something that is pretty much unavoidable. We have an aging population. Cost of healthcare is through the roof. It is quite unsustainable. I wish I had an answer. I do not. I think I put a lot of stock again into the productivity of the younger population now, the labor market now. In every and any sector is where we're putting it into. If we can have productivity growth and we can continue to become more efficient and labor markets are strong, that helps take care of rising healthcare costs. It's not a solution, but it certainly eases a lot of the pressure. This is picking up, which is a positive thing, or so I read in a lot of reports, that productivity is picking up. We have strong labor markets. And so that's a really positive thing. And what we'll see later with the invitation of artificial intelligence, that's how you get productivity up. We have AI will help stabilize the labor market rather than maybe a lot of detractors think that, Chat GPT-4 is going to put people out of business. I don't think so. I think it does the opposite. I think that it helps stabilize. I think if we can integrate it, we can see how this can make us better, more efficient workers, more tied in, that we actually become a stronger labor market. It's effective rather than corrosive. And I honestly do believe that. I think I'm the only one in my family of 6 that's pro AI. The rest of my family kind of laugh and say, yes, here come the robots. They're coming to destroy us. And I'm on the other side, invite the robots in, the Jetsons, for those of us that remember the Jetsons, right? We have Rosie coming in. Rosie was helping to make us more efficient of a household. So I invite the Rosies. I think the big thing is people just need those jobs. And I think that the job security that AI creates, it needs to be because of the advancement in technology, not in spite of it, right? That we still need our good growth and our good jobs. That's important. So those are really, I know that may feel like a couple of major headwinds, and they are, but to be honest, these things have been here forever. We've always had budget issues. Yes, we've had the highest deficits, and yes, we are taking on massive debts, and we're forgiving debts in a lot of places, and we're having immigration plays, and we're having, election plays. None of this has been any different over the last decades that I've started to really take note and effect of how this country is run, or quite honestly, how the globalized world is run. This is pretty common. It's just, it feels very tense right now. I can say positively that the markets have responded well. It's been excellent. We really are, even in a strange inverted yield curve and a strange world of fixed income, we're still doing okay. I still feel quite confident in our position. A little older, my kids are in high school now. I'm starting to now look in the other side of things, okay? And maybe my 401k doesn't want to take that next hit again in recovery. I understand that. It's the younger generation needing to stay invested in the market and let that thing grow for them, because inevitably we will have a meltdown again. Let's not say the word meltdown. We will have a pullback again. It won't be a catastrophe though. if I switch over a little bit, let's go to U.S. housing because I want to take the teeth out of the word. This was the conversation du jour at every party, or if you're out at dinner with your friends or you're talking with your family, it's housing and housing. And my wife works as a real estate agent in Berkshire Hathaway, so I hear about it a lot. There's a lack of inventory. I think what we've seen are blazing hot markets just in the near past. It will be quite difficult to sustain that. And I know from my personal perspective, I'm at a space of sure I can sell, but where do I go? Right? I can make all of this money. Great. That's wonderful. Where do we go with this? And so what happens is I now have to give up my rates were artificially low and I have to take on a new 7.5 or 8.25 mortgage. I don't think so. Right. I think what's happening is that people that are in the housing markets now are asking those questions and are making us stay put. That doesn't mean that it's a bad housing market. It really isn't. In fact, if you look at Deloitte, if you look at that report, and again, really good metrics, you'll see that young homeowners, first-time homeowners, young families, they're in a very, very sustainable space for home ownership. They are hungry and there's an appetite for that again. I just think housing is less of a key driver. I just think that it's not as key as it used to be for economic success and growth as much. I think what is job security and wage growth, right? Labor, wage growth, investments, savings and cash on hand, liability and debt management. So again, yes, your house should be one of your major assets and it will continue to grow. It really will. I just don't think it is going to become one of those key indicators as much as it should be. And quite frankly, we need to probably move a little bit of effort into saying, I want to have a good sustained investment strategy. Now, I'm biased, of course, right? I want a sustained investment strategy. I want to believe in the public or the private markets. And I want to make sure that we're attacking debt as hard as we can. We really want to make sure we're being tax efficient on the ones that are pulling money out. We need to be tax efficient in those manners, right? That's a real signal of strength, I think, in my view, going forward. Not how much did my house go up this year? How do we personalize that again for you, right? So we're staying on this kind of this macro level and elections, and yes, whoever gets into the White House, policy can shift in how we deal in both the local United States economy and how we deal with foreign relations. It really depends on who's taking the chair. We know that, but that's nothing we can control, right? We really can't control the U.S. housing markets because we can't control the inflationary measures the Fed take. What can we control? We can control, again, who we are and how we deal with our own monies. For the younger people, remember, we always have a range of listeners. And then again, over my decades in the business, I have been the young 20, mid 20 person coming up and have worked with clients that have gone through their mid-level careers all the way up to the very end of the most senior status. And your tastes change, your outlook changes. For you younger people right now, stay employed. That's a big thing, right? Stay employed. Live within your means. Invest in your future. Take advantage of 401k matches, making sure you're not just sitting on cash and it's not doing anything for you. If you have some cash and it has no point or purpose, put it to use. Trust in the staying power of the markets. We're not going out of business, right? Even though China Evergrande Group will cause some very major tremors in the global market. Does that affect somebody making these earbuds for Apple? Probably not, right? There's still sustainable companies out there. Trust in the power of the markets and that we are going to grow. Take advantage of those, invest for the long term, manage any debts that you have aggressively. That's kind of my sage advice there. I mean, I wish I could have told myself that in my 20s. I listened to about half of that, right? The older generation, if you're nearing retirement or you're in the midst of work and you've got some vision on your retirement or you just stepped into retirement, you're in a much different position in life. I mean, maybe these elections or this meltdown really could be a major effect on how you live out the rest of your life. And you're right. The markets have been quite kind to us for a very long time. Yes, we've had a little hiccup here in the last year, 2 years, but expect a hiccup. Don't expect a disaster, in my opinion, right? We have had very kind markets. We've had great growth. We've been very, very much loading monies in and letting it work for us. Expect a hiccup, but not a disaster. I mean, we could say we're due, but that wouldn't be fair because we don't know what's going to happen in life, right? We don't know what headline hits next, right? What's going to happen next week. What I will say is that you want to focus very, very intently for my people kind of in the middle stage of life, this bulk stage of life. You want to focus on your time horizon. Focus on an event that you can plan for. Your main monies are that those should be in an allocation for the rest of your life. But you are more than moderate growth or conservative growth. You're more than a pie chart on a 401k statement. Okay. We know that we need to have these bulk assets growing for you and prepared for the rest of your life. But back to time horizon, if I can give you something to direct towards, find an event that is near 1 year, 2 year, 3 year that is purposeful for you, whether it is a buying something new, a vehicle, you're moving, you're going through some kind of transition like retirement, you're going through a wedding, you're going for a trip, there's a debt that's been looming that you just need to put away and you know it's going to take 2 or 3 years. This is an event to start planning for and start moving assets appropriately. That's where we come in. You work with us, right? Work on the plans to start giving goals, to start attaining and going towards. What does that do? It distracts you from the main monies that we need to really still have trust and faith in the markets, that we need to let work. We need to have the powers that be work. You're more than just that, though. Have a goal that is short that you can concentrate on. We want to help you do that, of course. The seniors, my seniors that we see and give money and that call and that are worried about what's happening, you're not alone. But rest assured that we are still in a strange time in life in the fixed income markets. We're still very, very positive on the short-term spaces we need to be in for cash. You know, if there are any worries or concerns, that's when we step in and we make sure to do what? Are you spending the appropriate amount of money? Do we have enough to sustain? We've got to run math so that the math makes us feel better. We know that we're in a weird time, but we really are hopefully getting to a point of where a 6-year bond or an 8-year bond or a 10-year bond where we can set it and forget it is here. We're not there yet, but certainly Tradewinds and me personally, I'm already stepping towards that. What I mean is we're still in an inverted yield curve. It's the longest inverted yield curve we've had in a very long time, decades. That's a kind of a scary signal. But what can we control? We can take advantage of a high yield in a short amount of time. So we stay in CDs if we think we need to be there. But quite honestly, I'm trusting the major companies that are out there, the vanguards of the world. They control trillions of dollars. And when these things start to shift, the yields start to shift, or we have a meltdown of financial institutions, we've got power behind these really good managers. So we're trusting in them now. We're putting a lot of faith, and we're doing it with somebody that we know that can sustain a bad market. They can then shift from short term to mid-term to long term. That's our job. So we're going to load up now in the short term, but we are very, very keen on taking those short-term monies and moving it more towards the midterm, the 6 to 10 years. And eventually long-term, we're going to want to take those positions too. So again, That's us sitting down with each of you personally and knowing where are you in your stage in life. More importantly, what kind of keeps you up, what is most important for us to attack so that you can feel comfortable knowing that we've been through this before, but how does it affect me now? I would say overall, what is the most critical thing would be artificial intelligence. I really believe that if we're going to have sustainability in our lives in the United States, if the younger generation becomes more effective and quite honestly pays for the older generation that is putting a good strain on our healthcare and our benefits system, we need them to become more effective and efficient. And I think, again, artificial intelligence is one of those beacons. I think it's something we are picking up here at Tradewinds. When we brought in Mike, I think Mike really started to explore this. We used ChatGPT-3 initially, these large language models that we could start asking questions. We even upgraded now to ChatGPT-4. It's $20 a month, and it's something that we can now start to have some fun. You're going to see us start to lean into this a lot more. We want this to become effective. This is not a replacement for advice. We talking, we having our opinion, sitting across from the table from you, listening. A computer cannot do that. It cannot replace the human element. But what it can do is it can take all of the other stuff, all of the heavy lifting and metric, and create behind it. And then that's where you're going to see Tradewinds start to lean into it. So we've got some cool things teed up on ChatGPT 4 and something we'd love to show you when you're in-house of what we can do. Mike's going to throw out the share screen on it. I would say, Mike, let's just start with, let's ask the giant large computer, what about the Super Bowl? Who's going to win the Super Bowl? Let's see what ChatGPT has to say. And again, if you've never had a chance to deal in the open AI space, I mean, you're looking at it right now. You're looking at the site to go to. This is going out and it's taking trillions and trillions of lines of code and information and data. And here it is saying it's a rematch of Super Bowl 54. And we've got the 49ers have a slight favorite with a 2-point spread. All right. I'm not a gambler. I honestly don't care. I don't choose to lose money on the Super Bowl, but I'm sure it's effective somewhere for some sports betting or DraftKings or something like that. But that's really interesting for a computer to have an opinion on that. Let's ask it something else. Let's use it for something useful in our lives. How about planning a trip? Let's plan a trip out to the Bahamas. There you go, a week-long trip here. This is quite interesting. It's something that, again, a travel agent would say, is this putting me out of business? I don't think so, right? Because we still need that human element now. But this is now taking a huge lift and at least making them more effective to go back and negotiate and create. So here's our computer system doing a week-long trip to the Bahamas in April. You can be as detailed as you want on a lot of these questions. It's pretty amazing. So you can see flight costs here, $550 to $1,000, accommodations, food and drink. I mean, it can go on and on. You will notice we'll start using these things for our own creative measures, but you're never going to see ChatGPT 4 say, how do we invest a long-term portfolio? We're just not at that space, right? I mean, we really still need to understand that what we're picking, an investment philosophy, is something that is created in-house and we believe, and then that you as an investor merge with. A lot of people don't believe in my style, and that's okay, right? But there are a lot that do, and then that is how we end up having a good investment philosophy that we all agree on together. Very interesting if we're going to be going on a trip to the Bahamas. So I don't know what the overall cost would be. Total estimated cost, an average 1-week trip to the Bahamas, $1,700 or more, depending on the activities. I don't think the Whitneys would do it because we're a family of 6. So I know that number is probably a multiple of that, certainly. I tell you what, let's do something else. Let's see if it can create an image, right? Is there a picture that we can create? Let's put up an image. What can this computer system find? So it's not just words and metrics and information. There we go. Create an image of a sailboat named Tradewinds. Good plug. I love that. And again, this is where you get into the deep fakes and the AIs and the creativity and the artistic behind it. With every advent of technology, with every iteration of technology, you're going to have the bads and the abuses that come behind it. But if we can just move from that for an instant and see, look at what this thing can create, that's pretty. That's a beautiful thing, and something that, how do we implement that in our business? How can a young person start a new company behind it? How can they come in and make a business when they're starting on the ground level or coming in to become more efficient? I mean, you use this kind of technology. Remember, my younger kids, this is normal for them. This is like swiping on a phone, right? That is just a normal thing that they're going to start to lean into and have. That's pretty awesome to see. I want to do something unique. Let's do something interesting. Let's create a poem about the United States election. Here it is in 2024. Let's see what ChatGPT can do as far as waxing poetic on something as ridiculous as the United States elections. And here it is in all its majesty. Look at that. I mean, just able to come out and free think all together, let the banners wave, let the debates roar in this vital heart of democratic lore. That's pretty amazing. What a really interesting part. So when I was saying I'm a super fan of this thing, you can see why. This was 5 minutes using it. It helps stabilize. It helps make us better. Can there be some really wild, ineffective things that come from it? Absolutely. But that doesn't mean we should shy away from this part. I think for us to become more efficient and stable and become productive in the United States and maybe not stress so much about how our house is doing or our mortgage payment, maybe we lean into this space a little bit. And you can see even the United States trying to deal with chip manufacturing inside. I mean, again, we've seen in the S&P 500, the majors, the Microsofts and the NVIDIAs and, these Adobes and these main companies have really been the drivers. Will they sustain? They will not. They'll start to fall too, but they've been pretty darn good for us so far. And I think we need to recognize that that's who the United States really is, that we're an intelligence country, we're an intelligence market. And that is us using artificial intelligence now a little bit for us. So I hope that kind of gives a little light on it. Again, I never like to stay in throwing facts. If you want really good outcome on the economy and you want to see these things, there are very brilliant analysts, very brilliant men and women that are out there doing this analysis. JP Morgan's famous for it. Deloitte's got some really good stuff. Go out there and see it. If you really want to understand about debt and U.S. inflation, and you want to see how these metrics work, there are some brilliant people out there that are writing these things. I suggest to make sure that it's metric based, not pointing your finger and blaming somebody based, right? That goes on both sides. I really think in this year, in 2024, this is a cool time. That 270 to win website for the election, really good time to get informed. This is a time, especially for you younger people. I think a really good point is you don't get a chance to be ill-informed and then sit back and kind of moan and complain. This is a great time to become informed so that you're able to have a good conversation, and then your vote matters. And for all of us that have been through a number of elections before, get back and get ready for it. Here we go. I'm interested to see the battleground states. I'm looking at kind of the map right now. We've got some really interesting states. North Carolina is one of those potential battleground states again. But we've got Nevada, Arizona, Michigan, Pennsylvania, Georgia. I mean, there's some pretty big deals. This is going to be a really interesting election. I'm excited for it, to be honest. I'm going to get my popcorn ready. But overall, I love to stay positive. I mean, I really do. I trust the system we're in. I love this business. I love the markets. I love that if you just have some good faith and trust in these things, that they can treat you right. But I also know that this needs to be personalized to you. And that is why we need to hear each individual story and apply that. So I hope it's been helpful, shed a little light on where we are. But I've also challenged and want everybody seeing this. Write in, ask questions on what you'd like to see us do in the way of artificial intelligence and creativity for Tradewinds, because we really pride ourselves on trying to be a little different and attacking these things, right? We want to understand Bitcoin and these cryptocurrencies, not so we can sell it to you, but so we can be aware and talk about it and informed. And we're going to do that with AI as well. So we really love to have you be a part of that. That's all. I want to just say thank you for taking the time. I appreciate giving me a week to get through the flu and then kind of coming back. But I think it was relevant since Ron DeSantis isn't a part of this conversation anymore anyway. So best of luck. Happy New Year to you. We look forward to a great 2024. Take care.